seen countless traders just say, "Oh, I'm like you said, I'm following the strategy. I'm buying this robot." And it's, I guess that's part of their education, is trying to find learn all the different strategies and find something that works for them. And
I mean, what we some of the systems that we actually offer allow the trader to actually turn on or off certain features. So they can just have a Dynapoli stochastic that will open trades, or a certain, you'd have like a core engine that would actually help you open the trades, but then you still decide which indicators you want to use. So it has more configurable settings and stuff like that. So that helps. One thing I just want to say is there is people coming into the market that actually feel that an automated system will actually just print them money. And they can just come and buy something for $50 or $100 or whatever, pounds, whatever, and they feel it will just make them 10,000 a year, and they just press a button and it works. And there's a lot of people that actually do feel this way. And this is a problem, really.
You just got to my next point. I'm like, is there such thing as a holy grail? I've seen so many programs called the Holy Grail, and everyone's like, "Yo, this is gonna work. This is gonna make tons of money." Oh, you already said they don't exist. What would a good system look like? Since
yeah, I think there are some systems that are on MyFXbook and stuff like that. There are people that are using automated system. How much is that is automated, and how much is that as a hybrid between the trader helping as well? I don't know. But my honest opinion, if there was any system, any trading system on this planet that could make money guaranteed every year, all you need to do is scale up the value, and you'll just consume you'll just make so much money. So there isn't one. Yeah, there isn't. Otherwise, you just have if a trading system could print money on a regular basis, every year after year after year, you just need to keep increasing. Depending on how much capital you've got, you could literally, make a lot of money, make all the money.
Yeah, and I think one important thing with MyFXbook, I don't know if it's like that now, but in the past, MyFXbook could be gamed a little bit, where you deposit money, and that kind of looks like a gain in the system. So you kind of have to watch out for that kind of stuff too.
Yeah.
Okay.
Well, I guess in terms of the trading, I'll leave that for a little later down the road. I guess with scalability of a strategy, it might work for a certain amount of money. How does it work for a different amount of money? Because one of the bigger things, there's slippage based on how big of a lot size you try to open up. You can open up one unit at a certain price, but if you're trying to open up 100 or 1,000 units at a certain price, you have to factor in that there's only so much liquidity in the market, and you're going to get filled at certain prices. So, how do traders scale up their strategies and make them durable for growing?
Hugh?
Yeah, sure. From what I've seen, the guys with the bigger amounts of money, what they do is they create their own systems. So, like you said, if you put too much in at one price, you're going to start moving the market and you're going to get bad fills. So what they do is they create a system that they have this target price, and the system fills them around that price so that they don't move the market too much.
And how would someone factor that into when they program a strategy? Or
okay, so if it's an automated system, then it's all about drawdown, really. It's all about how much they're willing to risk. So that touches on another subject, actually, because most of our trading systems are quite conservative. So we're looking at 5% or less drawdown of your capital. So at any point during that 1 year period here, 1 year back test, if it's a 5% drawdown, it means your balance or your equity, depends which drawdown you're looking at, will say 5% loss. So if you had £100, you had, work that one out, £50, whatever. No, £5. You were £5 down. So the whole idea is, if you were doing a system, is to actually work out, first of all, how much capital you've got, and then what drawdown you want to use, how much you want to risk. Some traders might want to actually gamble and do a 50% drawdown. So they're doing 50%, pretty much flicking a coin, saying at some point half of my money is going to be at risk during that period. So it all depends on the trader and their appetite to what they want to risk. I think long-term, as a long-term business, I'm sure most of the investment companies look at a much lower drawdown and much lower risk and much lower return as well. So the whole idea is, I don't know how you manage some of your traders and how you actually look at risk, their risk appetite. How do you do that? Is it Like, do you get traders that are quite willing to risk 25% of their money at some point?
Yeah, I mean, I try to rein them in. I think it's all about realistic expectations versus your personality, right? Yeah, some people can do the Larry Williams where they risk they have a 50% drawdown, right? Some people are willing to do that, but I think most people really are looking at the conservative side, kind of like how you do it, Paul, right? Like they don't want to have a huge drawdown because that's psychologically damaging. So they're looking at a much smaller drawdown. And I have to tell them that, okay, realistic expectation is that smaller drawdown means smaller return. So
yeah,
I think that's a key important thing to look at.
Yeah, definitely. And they have a longer time in the industry as well, I think.
Yeah.
Because it's like if you have a higher drawdown, there's a higher chance you just keep blowing your accounts and then you stop.
And also the way to recover from there is you got to have so many more. You can't. If you lose 20%, you need to gain 40% to get back to break even, kind of.
Yeah.
The risk of ruin is just tremendous. And from a brokerage side of things, when the clients, if they're going to be just shooting from the hip, their lifespan is 3 months or less before they go bust and they and they blow it. If they're trading responsibly and they're going low and slow and they cut out losers and they live to fight another day, they're with you for years.
Yeah, definitely, yeah.
And I guess the first part is finding out what the heck they want to do on the trader psychology point, or what their expectations are. Are they realistic? And I oftentimes people lie to themselves. I find they just, this is what I want and this is what I want to hear and this is all I want. And they like, no matter how honest you are to them about what they're getting into, they just want to hear what they want to hear, and they're just like, they want what they want.
I think most humans have this dream of being rich, and this is the problem. They come into the industry because I understand how they feel, because you come in and you think you're going to make a lot of money. They're actually convinced that they're going to make a lot of money, and this is the problem. They don't look at it as a long-term business. They look at it as, I'm going to get rich fast, and this is how it's going to work. Some of them do, I suppose. Most of them, I don't know.
Yeah. Well, I used to think I thought opposite to the herd, but then I realized quickly I'm stuck in the herd. But yeah.